Good morning. This is Ron Brown. It's Saturday morning, the 28th of October, 2023. I'm going to do a relatively short market report. I want to cover a few things today. And I want to show you my indexing settings. I think some of the best analysis you can get out of HGSI on the market is to look at the indexes or the indices that are created by the program because it's gives us a lot more insight than just looking at the Nasdaq or the NYSE or the S&P 500. So I'm going to show you where I set my indexes. I'm going to talk about using HGSI market charts for analysis. I've done this before, but I want to do it again today. Money flow in and out. I'll talk about that a little bit more, and some new filters I put in for the Insider Club users. They're indices filters, and I'll show you what I'm using those for. Just experimental, but I think they have a lot of use, so I'm going to cover those things. I want to go back one. Sorry about that. Standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. And then if you don't have HGSI, you should have if you want to do the type of analysis that I do. You can get a 30-day free trial without putting any money down at highgrowthstock.com. Just go to the site and you'll see a link to the free trial. Now, I know these are tough times for the market, tough time to be looking for stocks, but it's a good time to learn. You should be protecting capital and learning at this time. So I'll get this out of the way. And I'm going to go up here to my main menu. I just want to show you that my global index options, and I've done this for years, I use a relative start date of 104 weeks because I want to see indexes for 2 years, not 1 year. And I also use market value weighted index, which gives a higher weighting to the larger cap stocks. It just seems to work better for me. And then use the default internal filter. Last close greater than or equal to 5, so the indexes are made up of stocks $5 and above. And make sure this don't use deferred index building is checked. That's something that we just don't even use anymore. Okay, I'm going to cancel that, and then I'm going to get into a discussion here of the markets, and I'm going to be using the HGSI market charts. But before I do that, I want to point out a couple of other things. If all the indices have been updated as of Friday with the stocks that belong in the Nasdaq, the S&P 1500, 500, and so on. So everything is current. Now, for those of you who are EdgeRater users, I want to point out, I'm going to go into the designer here, that the list really needs to be updated for the stocks that you track. I know most of you use the S&P 1500, so what you should do is go into the HGSI reference groups, go into the major market index components, S&P 1500, and you can see there are 1,506 securities in here now. And what I do is I transfer this to the warehouse view, and I will use under my name, I use this, the number 1 scorecard view, end of day. And you can see it says 1,503 securities in there. To make sure everything's in there, I make sure there's no filter on and it's the same number. And then what you have to do is just go to Save As, and in the EdgeRater, wherever your EdgeRater documents are, symbol lists, just locate the S&P 1500 and overwrite it. It's a text document, just overwrite it. And then you have to go into EdgeRater and update that list and rebuild it, and then you'll get the information that you want every day as far as percent B and so on. Now, for those of you who don't use EdgeRater but do use HGSI, just ignore everything I said. But I know several people use it, and I wanted to point out that I want you having the latest information. Now, the next thing I want to point out is this morning I had a brainwave, as Ian used to call it, and I put some filters in under indices under my name. These represent all of the stocks that are in the Dow Industrials, Transport Utilities, Nasdaq 100, and so on. And why did I do this? Because going back to the money flow, and let me go to the designer and go into my user smart groups. And right here, this is dated. You can see the dated money flow. Now, some of you had questions about whether you had the right user smart groups or not. If you have this one right under my folder, you have the correct thing. Now, the reason I built these filters, and Friday may not have been, or may not be a good example because everything was going down pretty much. But the reason I built these filters is I wanted to quickly see what the money flow, how the money flow is represented with the different exchanges. So I'm going to click through here. I'll bring this up. Okay, now you can see that I am using the top money flow, which requires an industry percentage price change 1 day and beginning of the week. Those both have to be green for the industry group. And look, only 33 securities are in industry groups that are up both for the day and since the beginning of the week. And if I sort on the percentage price change, you can see that e-commerce, building subcontractors, steel, raw material, and marine shipping is the dominant group, and these are SPACs, investment companies, and so on. But very limited strength in the market, and you all know that if you've been watching the market. But now, when I go down to the next one, where there is no industry group requirement, we go from 33 to 147 on the money flow in. And the only requirement for these stocks is that they be up for the day. So if you look down this list, you'll see that all of these stocks are positive for the day, but it jumps all the way up to 147. Now, the reason I created these filters is out of these 147, if I go up to the top here under indices, I want to know how many of these stocks belong to the Nasdaq 100 that are showing money flow in. And it cuts it all the way down to 6 stocks. Now, I know that 6 stocks out of the 147 belong to the Nasdaq 100, and that's not very many. You can see it's Amazon, Mercalibre, I don't know how to pronounce that, Mercalibre, PDT, Dexcom, Fastenal, and Dr. Pepper. But so out of the 100, and I think there's 102 stocks in that index now, only 5 of them were showing money flow in. Now let's just go the other direction and money flow out with no industry group, and you can see that these stocks using the Nasdaq 100 filters, there's more flowing out than in on the Nasdaq 100. And then I can quickly look, or I can go to the S&P 1500, apply that filter, and see how many stocks out of the S&P 1500 were flowing out of the money flow out folder. And you can see it's 93. Now, if I go up to money flow in, only 35 out of the S&P 1500 were flowing in. If I want to narrow that down and only look at large cap S&P 500 stocks, that cuts it all the way down to 9 flowing in and 53 flowing out. So you can get a real sense of direction, or a real sense of the market capitalization of the stocks that are flowing in and out. This can be useful for other things too. I'm just going to stick with the large cap filter, and I'm going to go into the designer, and I'm going to go to custom groups. You could go to the top 50 most recent. You can see this is the S&P 500 stocks on the group inclusion report. You can see there are 4 of them that belong to the S&P 500. And how many belong to the Nasdaq 100 too. But I think what would be more useful, or another thing that would be useful for, is going into option volume. These are the Chicago Board of Trade and the Options Clearing Corporation, 300 most active stocks. If I'm looking for active stocks to trade with, these have weekly options, I believe, all of them. I just click on this folder, and it, using the S&P, I'm sorry, I have the Nasdaq 100 filter here, and you can see that 47 of these stocks trade active options. Now, I may expand upon this next week, but I just want to show you what you can do with these filters. Now, let's really get into some market analysis quickly. I don't want to spend a lot of time on this. I'm going to go into my market analysis user groups. I'll go to the major markets. I'll click on that. Then I'll go up to the top-down process views, bring this up, minimize this, and let's just take a look at the Nasdaq composite. And go into market charts. Okay, this is the first chart. It contains advancing, declining volume, new highs, new lows, and the ARMS index, which I rarely use anymore. But this is my original chart, so I'll just start there. And you can see we had an inside day, but it was a weak inside day because the gap, bring up a it opened here, but it closed here, so that's a weak inside day. But it did trade up from the lows. Now look at this. Look how light the volume was on Friday. This may be exhausted to the downside, pretty close, but you can see the volume is just way down compared to the other days. Now here is advancing versus declining. You can see the decliners are going up and the advancers are going down. Volume, more declining volume than up volume, and new lows reaching up to the highest point. Let's look at some more things here. You can see the trends are all down. Closes down, volume's less than average, like I mentioned. Spread is below average when compared to the other spreads. The gap was 0.99 up. It gapped open to here compared to that. And let's see, what else is, well, this is the big thing, volume change, minus 15.3%. So the selling pressure may be coming off of this market. It's certainly oversold. Let's go down to the next one. This is one I put in a while ago. You can compare the Nasdaq and the NYSE advancing, declining stocks to one another, and the same for the volume and also new highs, new lows. Just a quick reference chart. This is a comparison to the S&P, the Nasdaq, and when the blue line is going up, it means it's actually outperforming the S&P. So the S&P was weaker for the past couple of days because this blue line is going up. This has the same chart except the AD line is in here, and you can see it's been under pressure, but we're going to take a closer look at that. This is a McClellan oscillator. People look for divergences between new lows and the oscillator. I really don't see a lot of divergence here. On the NYSE, I think you're seeing more divergence, but this level put a crosshair on it. Well, if you look at divergences like this is lower, much lower than this, and this is higher than this. That would be a divergence. So that's another sign that maybe this rally is just, or this market is just totally oversold. New highs, new lows. Let me zoom out on this. You can see the new lows are getting up here, but not in the extreme area here, but still quite a contrast between the new lows and the new highs. And if you look at the moving averages, the index is well below the 200. Now here's the AD line in this chart. You can see that it's just been going down for quite some time. And that's it on the Nasdaq. I'm not going to go through the NYSE. I want to point out here the moving averages. These are exponential moving averages, and the index has broken the 200, clearly broken it, and it's well below it. Now if I put a crosshair on here to this point and look back, it's given up all of this here, and I don't see any, well, this is kind of a support, one-day support. That really doesn't count. So, it's looking bad. It's oversold. Everything's negative. Now let's go in and look at I'll use the S&P 1500. But I'm going to go down here. These are the major markets plus. I want to go down to the broad market indices. And let's find the S&P 1500 here. Now, if I click on the ranking module and I sort comparative number of weeks 1, it shows me that the utilities are up 4% versus the SPX over 1 week, and the Dow is up slightly compared to the S&P. Russell's even slightly above it. Anything above 100 is beating the S&P 500. But then when we go down to the Nasdaq 100, you can see that it's slightly under. Just a quick reference. You can also use the percentage change, and that way you can get a feel for how much these indexes were down or up for the week. Now I'm going to go over here to the charts, click on this, and I'm going to get out of these charts, and I'm going to go into the HGSI index charts using the S&P 1500 and take the crosshair off for now. You can see that the A distribution started to come down a little bit, and then it turned back up. We're on D distribution up here. I'm sorry, E distribution. Markets is totally oversold. Here are the A's. Now here are the A's and B's and the D's and E's combined into a single line. The instructions or the labels are over here. So the D and E's are continuing to go down. And as I showed this last week, but you can see the money flow into the E's and the D's, out of the C's, out of the B's, and out of the A's. So lots of distribution going on. Then this is the A and E up here. And this is a Chaikin indicator. This is a slow-moving 21-day, but you can see it's been on distribution. It went negative clear back here. It's been on distribution for all that time using this histogram. Now these others, this window right here shows AD, green percent AD, and velocity. Look at all the red red bars is what I'm trying to say, showing distribution. And that pretty much corresponds with the Chaikin. I'm not seeing any accumulation. Now, this is the S&P 1500. If I go to the Nasdaq, you can see there was some accumulation coming in here on these bars, but it's been all distribution going out. I want to go back to the S&P 1500. Okay, let's move on down. Advanced decline line, here are the numbers from yesterday. 1202 decliners, 280 advancers. I don't have the unchanged in there, but the A minus D is minus 922. Real bad day. This is a percentage of stocks above their 20, 30, 50, and 200-day moving averages. It just isn't pretty at all. You can see how dangerous it is trying to go long. Now here is the index I put together many years ago, which, if all these conditions are met, it's going to generate a sell signal. That sell signal, there was a buy signal here a couple days, and then an immediate whipsaw, a sell signal. This is not bright red because the advancing declining volume was not bright red. It was rose instead, so it wasn't as much, well, it was a sell signal, but just not as strong as the dark red. But if you look down here, this corresponds with an effort to fall, and the index is below the moving average. And there was selling pressure right here on heavier volume. Same thing without the moving averages. I just wanted a clean look at it without the moving averages. Same chart though. Number 7 is just a close-up of the advanced decline line for the S&P 1500, not for the entire market, and the percentage above the 50-day. And then these are the trend colors which correspond with this information right here. Not looking pretty at all. And then AD line trends. Here's all the pertinent information that appear. It tells you the percent above the moving averages, the accumulation distribution. 0.4% of the stocks have A accumulation. 8.34 have B accumulation. 43.81 have D distribution, and so on. Just some good information here for a quick read on these indexes. Force indexes, you can see the Force 13 and the Force 2 turned negative on this day. And the Force 13 didn't get back above the zero line. The Force 2 did on one day, much more responsive. This is today's close minus yesterday's close times today's volume is a formula. And it works pretty well. And then here's that McClellan oscillator I talked about earlier. There is divergence here, slight divergence. Here's the low diverging from the low, another divergence. You compare this to the actual index, and you can see some divergences. And then here's more of the same. You can see the distribution bars up here. No really accumulation bars. This has been red from clear back here on the S&P 1500. Now remember, all of these indexes, of course, are going to show you a different thing. I like to use the S&P 1500 because it contains the 500, the 400, and the 600. And it just gives a nice look at the broader market. But you can analyze any of these. Now, let's just go up to the utilities. Look, it's totally different. Here's accumulation bars in here. If I go up here to the top, you can see the A's and the B's have surpassed the D's and E's. This one's hard to read. But you get different readings on everything. The Nasdaq 100, of course, lots of distribution here. So if you want a quick read on it, I would stick to the S&P 1500, but that's up to you. The point is, these indexes are created by HGSI, and you can analyze them with all these indicators and really get an insight into what's happening in the market rather than just looking at the Nasdaq or the NYSE or the S&P 500. Well, we can look at the 500 in here. Why not break it down to the actual index, and then you can look at the internals rather than just looking at the index itself. Then just to take it one step farther, and then I'm going to end it, I'm on the S&P 500 index, but I'm going to go back to that money flow right here, and then I'm going to go up to the filters. They're up here under indices and the S&P 500, and I can quickly see here's the overall index, but for the money flow indicators, I can see where the money flow in was yesterday. You can see these percentage price changes are up, or I can go to money flow out and see where the money flow was coming out. So combining the chart, the overall chart, with money flow, I can quickly see where the extreme weakness in this index is, because these stocks all had money flowing out of them. I know I threw a lot at you this week, but I just am trying to show you the power of this program. You probably won't go through all of this, but at least you know it's possible to go through this process. Thanks for listening, and have a good week. The market is terribly oversold, but with what's going on in the Middle East and in Washington, who knows where this market's going. I know a lot of people are looking for a bottom here, but I'm just going to let it play out and see what happens.